Right, thank you very much for attending today's market analysis webinar from London Capital Group with myself, Jasper Lawler. It is the weekly market analysis webinar. Now, we do primarily focus on technical analysis, determining price trends, etc. of the major markets covered by London Capital Group. But just a quick summary of some of the news going on at the moment. We were looking a bit more positive at the end of last week. Apple hit $1 trillion, boosted sentiment generally across equities, but we're looking down a bit as we start this new week. Still those trade tensions a bit of a concern. China looking to retaliate against the US latest threat of tariffs. So still that tit-for-tat tariff concern. Sort of weighing on sentiment a bit despite a very strong looking earnings season. On the currency front, the latest news was actually again from China. It was the People's Bank of China. They set a 20% margin on betting against the Chinese yuan, which hit one-year lows last week. So that caused a bit of a boost in the value of the yuan, but actually the dollar has pretty much been going up against most currencies after those non-farm payrolls results last week, which slightly missed expectations, but wage growth was on par and wasn't really enough to dissuade anyone that the Fed is on course for its 4 rate hikes this year, and the other central banks not so much. Bank of England raised rates, but the press conference from Mark Carney afterwards pretty much inferred that he thought the most likely scenario was that we'd actually end up cutting them again in the case of a no-deal Brexit. So still Fed, the only central bank out there hiking interest rates and making the dollar look attractive, really. So switching gears from that, let's jump over to the trading platform. Put that on full screen. So starting off with the euro, quite a few more trend lines than I normally draw in markets at the moment. I think there's a bit of a triangle pattern taking place here, which we've potentially broken down below. If you draw a more conservative pattern in, we're testing the lower boundary of it. We're basically testing the support, if you like, which is right in and around that 115 mark. But if you do connect these lows, connect this low and more like these closes through here, then it does look more like a symmetrical triangle, and we're breaking down from it. If this were a triangle, using the height of this, basically of this candle down here, but you know the difference in height between the two trend lines, you basically project it from the breakout area, and it would take us a fair bit lower from here, down to under 113, if this triangle break has any weight. So we'll wait to see if we can take out these lows here, basically at 115 on the money, 115.05, but break at 115 could quite swiftly open up another 200 points lower. It does look like we want to break lower if you judge it on momentum, which often precedes price. So obviously RSI is a way of calculating momentum in the market. You can see we've already had a massive breakdown of this rising trend line here. So this is the equivalent in price. So this is the RSI one, which has broken down quite heavily, and it remained well below the 50 mark. You know, we kind of struggled around 50, indicating trend is still down. So momentum not really indicating any signs of a bottom yet, but let's see what happens at 115, but it looks soft. If we drop down to the 4-hour chart, you can see here's where we kind of drop right down to the trend line, nudged through it, tried to get back through it, failed, and we basically had a kind of drop through and a retest, and we're heading lower now. So trend on a 4-hour chart quite swiftly down now, and actually we're kind of almost coming, well, as I say, it's that 115 mark is what really denotes that longer term range, but from a 4-hourly perspective, quite actually a strong downtrend with both the moving averages in line as you'd expect them to be in a downtrend. So we're not even close to the 20-period moving average. Maybe we get a little rebound again to there first. That would provide a nice opportunity, but at the moment, you're just seeing a quick succession of lower lows on this 4-hour chart. So arguably a bit oversold. maybe when we get a pullback out of older sold territory and then start to roll over again, that might be your opportunity to get involved with this move down to 113 if it does in fact take place. Switch gears to sterling. So we just hit a new 11-month low in cable this morning. So you can see this is kind of stretched out daily chart, and taking us way back, obviously below the recent low, and stretching way back over here to September of last year. So obviously we're in August now, so we're pretty much looking at those 11 months. You know, the trend has been down for a while. I've been saying stick with this longer term trend. I've been saying that it looked like there were signs of a bottom, but still, as a rule, I will follow the trend first, and at the moment that's proving itself correct, as it often does. These trends last longer than you imagine that they should be. You know, look at all the news, you know, news of the Chequers plan and soft Brexit. You know, it made sense that maybe there was going to be some sort of bottom in the pound, but as it turns out, no one basically has any faith in this soft Brexit Chequers plan of Theresa May's. Everyone's rejecting it, including the EU and half the Tory party. So there it is. No one believes in it. Actually, Liam Fox today saying he thinks it's 60-40 that we get a no deal versus any kind of successful outcome in Brexit. So just the chances of no deal increasing here. And does that necessarily mean a really bad thing for the UK economy? Not necessarily, but from the currency market perspective, it does mean quite strong likelihood, as Mark Carney recently said, you know, the Bank of England would likely cut rates again in response to that Brexit scenario, just to kind of just as a security measure. So the chance of higher rates for the pound looking very much in doubt while this whole Brexit scenario is happening. And so the trend is down. You know, we're right at the lows at the moment. Maybe we get in the short term here, if you're looking at the 4-hour chart, if we do get any little rebound just to the previous low here, that could be an opportunity. It's going to be between these lows here. That's our previous support that could come back and act as resistance. If you're looking for higher prices still, obviously we are heavily oversold at the moment. Again, I'll pull back towards the 50 area in the RSI on the shorter term charts. Maybe you get something in line with this trend that we were seeing here. So a pullback maybe past the 130.50. But my feeling being probably, you know, we've got 130.50 here as an important low, but actually really psychologically it's 130. If we close the day today below 130, this was not, we didn't see a daily close in this, it was just intraday. If today we get a close for the day below 130, it probably opens up a lot more selling. And so you're not going to get some really huge rebound up towards 131 again, I wouldn't imagine. That said, it is summer trading conditions, so you know things can be choppier than normal. So you know, look for these initial areas of former support as new resistance. Obviously, if they give way, you know, look higher up towards these moving averages and the declining trend line for a better opportunity higher up to sell the market down, but still very much a downtrend. Dollar yen, we've been calling positive. You know, last week we were talking about this rising trend line as well as these moving averages should, in theory, act as support. What we've seen is natural in a way where everything does still look pretty positive in terms of the trend, but we did have that big down drop. And as we've rebounded off it, so obviously there was buying interest that came in, you can see through that candle. But as we came into that little support area there, it acts as a resistance and we pull right back to the trend line again. Of course, we could break the trend line and that could be an interesting opportunity in itself for maybe a more prolonged down move in dollar yen. But if you look at those euro and those pound charts where pretty much all the currencies moving down against the dollar, you'd suggest that probabilities are that we get another rebound up to the highs here. That's what we were saying last week. Obviously, we've had this little pullback for 3 days. We're kind of back at the trend line again, so we're saying the same thing again. It's, you know, these things don't always move up in a straight line, but we're still expecting a bounce up towards those highs, towards 113 again. But you've got a pretty clear-cut line in the sand to tell you whether that idea is wrong or not. It's that rising trend line. You've got the rising trend line, and then you've also got, from a longer term perspective, if we zoom out the daily chart a bit, you know, this big deal here. If we do hold these levels, we've in effect broken that really long-term down trend line, and you know, it could mean much higher prices for the dollar going forward. Over to equities, it's been really choppy for the UK 100. So basically that trend line did prove interesting, but I think it's probably done for now. So if you remember, I was talking about sort of a bit of a kind of triangle pattern. And you know, again, it was a matter of where you draw the lows, but it looked like this was a bit of an interesting trend line. We broke down through it, and we crashed right through down to the bottom of the range. So did end up being quite a nice trade, as you didn't get right down to these lows here, but these couple of lows in here, basically around the sort of 7,500, 7,550 mark. We've rounded about right back up, and we're finding resistance at that broken trend line. So potentially heading lower again, but it is very range-bound trading, so I wouldn't put too much weight on it. The only reason perhaps more weight than normal is if we jump over to the Germany 30 chart, you see quite a similar looking thing. This is the 4-hour chart for the Germany 30. Daily chart, very choppy, just sideways, with a few key resistance areas in the kind of, you know, basically into thirds almost, 1/3, 2/3, 3/3. We're right around the kind of border of that top third at the moment. And it potentially looks like if we roll out of this top third, then we're heading down to the bottom of this one again. So similar looking scenario where we had quite a big breakdown at the end of last week, rebounded, retouched, and potentially about to roll over again. In terms of fundamental drivers, you can always pick something, but it doesn't seem to be much driving this little rally here, so it could be just some relief after the sell-off, maybe a technical bounce to be able to sell into. So got a cluster of moving averages in here and a broken trend line, suggesting maybe the market rolls over from here. If you're sometimes, you know, if you are trading multiple indices, it's ideal if you can be long one and short the other, particularly if your risk is lower than your potential reward on both. So this is potentially one of those scenarios, because here on Wall Street it looks a lot more constructive than the other two. You're getting that same thing with the bounce and the pullback, but instead of it being a bounce back to a broken rising trend line, it's actually a pullback towards a broken declining trend line. So more like we had like a little flag pattern here. We're broken out of it and we're pulling back, not only to the top of the declining trend line, but also the 25,400 mark, which if you pull out to the daily chart, you can see is actually that old resistance as well on the longer term basis. So we had a little hammer pattern off the 20-day moving average. We broke up through that short-term trend line, pulling back to that long-term resistance level. So a few things lining up for a push higher in Wall Street, which is not quite what we're seeing in the UK 100 and the Germany 30, but which both look a bit like rebounding and softer environment. Switching gears to gold, this is the short-term chart. We had a little area of support through here. It looks like we've bounced up to it, the 20-period moving average and that area of support, and we're rolling back over it in the context of a big old long-term downtrend. Downtrend still very much intact. It's what we've been saying for the past few weeks. You know, no evidence whatsoever really that you want to be buying this market. Yeah, we'll continue to push lower. I had mentioned 1205 as potential base on Trading View, just because it is in line with this big swing low from December last year. So, oh sorry, no, from July last year. So we have hit 1205's been support, and there was a big huge rally at last time we hit it. So perhaps some basis for profit taking on this big decline, but again, it's profit taking on shorts. It's not anyone getting initiating big long positions, I don't think. Trend's still very much down, so better to stick with that trend for the time being. If you are tempted to try and buy the lows in gold, if you are a bit of a gold bug, you know, maybe look for, we have got some bullish divergence off the lows. Maybe look for a kind of break in the momentum little triangle pattern that seems to be developing here. If we can get that in confluence with a break of any kind of trend line here, it's still going to be tough work, but maybe gold is due kind of a rally out off the maybe due some kind of decent rally here. So if it does take off, it doesn't need to come back and retest the lows and take out your stops first. Maybe it is ready to rally out of the blocks out and break out of that trend line. In essence, there was the first low. We've come back, we've kind of tested it a little bit. Was there actually a daily close below there? To be fair, there was. So with that daily close below that previous low, I wouldn't really necessarily call that a false break. You know, you want to see the market close back above that level. There's a better chance as a prelude to a really strong break of that declining trend line. But still, it's a potential there. Just maybe not the highest probability trade, I would suggest. But if you are looking to buy in gold before that 1200 number, you know, maybe this is a situation setting up. Brent looks quite positive. It fell back down off that you know, that daily peak there, and it was the a confluence of the two moving averages. It dropped right back down to that old support, but it's kind of looks like it's we've got kind of the two matching lows there, and then we're getting the break as of today. So short term, looking like a potential push through. So we had the rally off the low, came back, basically tested those old peaks, consolidated, and now we're trying to break out of there. So looks vaguely positive off that longer term support level. So you know, oil looks short term positive in a generally range bound environment at the moment. So I'm gonna leave it there. I think that's all the major markets covered. I didn't see any questions for anything else in particular. So yeah, please follow me on Twitter and TradingView, and follow the company on YouTube, and you'll see all the latest analysis as it comes out. Thank you, everyone. Good luck with trading for the rest of the week.